Welcome everyone. I really hope that you're having a really productive day and trading week. Just so you know, we have CPI this week and we have a lot of volatility coming up in the market. So I want to make sure that you guys are playing it safe and not rushing into any particular trades. Those who are in my Telegram, they know that in the morning during the London session, I actually called out that today will be an expansion day. Okay, I guess I've shared it in my group, and that's what happened actually today. As you can see, it's a newsless Monday, but still it expanded. Why? What was the reason behind it, and how you could have entered a really nice RR trade? And as I've promised to my people in the Telegram, right, the community which I've been discussing all these ideas with, I was going to show a revised video on top-down analysis, right? Most of the times we do top-down analysis in a way which is like really conventional, and we come up into the charts, and suppose it was from here. Okay, we come up into the charts, we look directly, we start looking at this thing. Let's suppose I go on a 4-hour time frame. Yeah, conventionally, and in the ICT's pattern trading community, first thing they look at this FVG right here. Okay, and then they mark out this this order block, or these series of order blocks, or old highs, whatever, previous day high, previous day low. Of course, that's the right thing to do actually, because unless and until you don't know the key levels, you cannot anticipate price to move down to or go up to, correct? But there is another key component actually which we've been totally missing, and that's what I think that a lot of these videos which you see on the on YouTube, they fail to deliver the fact that you don't have to look at these key levels first. Key levels, they matter at times when other things are combined with it, correct? What are the other things I'm speaking of? So if suppose you are looking at this thing fresh up in the morning, it's a Monday morning, and London session is approaching, and you're looking at the charts right now, and you have no idea, you're just looking at the naked chart. Okay, you have nothing to do over here, right? You have like literally nothing. Let's suppose I'm showing you guys E-mini S&P, E-mini S&P, and E-mini Nasdaq. Okay, because I've been trading futures for a while now, and I'm really inclined towards it. So you are literally sitting on the chart, fresh up, okay, and you're waiting for price to drop down. You're seeing this liquidity zone right here. Okay, conventionally speaking, seeing these liquidity zones right here, or maybe this high or this low. Okay, you're looking at the right things, of course. Instead of going all the way of the old times, what you have to look for actually is, the first thing of course is the sequential Ssmt. Okay, let me just write it down for you guys so you understand. These are your steps. Okay, step number 1, you always, the moment you get on the chart, okay, suppose your bias for the day is bearish. Why is it bearish? What makes the bias in your mind bearish? Because it's subjective. So what do you do? The very first thing in the morning, okay, you look for a sequential Ssmt to support your bias or idea, right? If you do not have this, trust me when I'm saying this, and I'm speaking from experience, if you do not have this, your bias or your idea will be less probable. Like the probability of the idea will drop down significantly if you do not have this. I'm not talking about a normal SMT, I'm talking about sequential SMT. So after learning Daye's quarterly theory, okay, and combining it with CRT, I noticed the fact that a lot of CRT traders, the first thing they do when they get on the chart is look at what? The candle range. Okay, they're looking at this range right now directly. The moment they get in, they're like okay, yeah, we have a sweep of the 10 a.m. candle, okay, of Friday, and then we are expecting price to drop down below, right? That's actually what the pattern traders do. Even me, I'm not like, you know, judging anyone at all, but I'm just pointing out the things which we have been doing wrong and what we have to improve. So if you're going into the charts looking at a candle directly and then thinking that okay, I'm gonna short the moment this candle closes, and then I'm gonna wait for the price to hit the 50% level and then the rest of the range, you are highly mistaken, highly mistaken. Why? Because I've been taking losses because of this approach, literally because of this approach. Okay, so getting back to where I was, you look for a sequential SMT to support your CRT or your bias. Okay, secondly, okay, not secondly, firstly, if you look for a second sequential SMT to support your idea, you have to look at the higher time frame. For me, I look at the weekly cycle. So what is the weekly cycle? It comprises of 4 days of the week. So Monday, Tuesday, Wednesday, Thursday, Friday. So if you have Friday already established, the Friday's low and Friday's high is already established, you want Monday, if you want to be bearish, okay, you want Monday to have a candle closure above the Friday's high in one asset. Okay, in one asset, suppose here in Nasdaq you want, let me just go back, see this, you want one candle, one asset to have a candle closure above, and then another one failing to close above or like even wick above. Okay, that's what you call a sequential SMT and a true SMT. Actually, over here you can see we have here we have the Friday's high, right? And then first we took out at the Sunday open, and then during the manipulation quarter, which is the second quarter, price delivered above, but here in S&P you can see that it failed. What do you see over here in this chart? See, there's a cookie for your eyes. We had an SMT first, and then the formation of the CRT range was here. You see, here once you have the sequential SMT, you do not need a key level. Let me say that again. Once you have a sequential SMT, you don't need a key level. Key level. Why? Why is this the case? Because sequential SMT is supporting your idea. All right, you have time in your favor, so you don't need a key level. When time plays a higher part, okay, meaning in time price failed to deliver above this high, okay, so we have a failure swing right here, which means we have time, which is exactly the 3 a.m. candle playing a higher hand instead of having a key level. So here first you had the sequential SMT. Okay, if you do not see it, let me show you again. First you have a sequential SMT, and you can see over here we also had CRT, but there was a candle closure above. So this is also another crack in correlation. Okay, this one right here is also a crack in correlation. On top of that, I guess we had a PSP candle. Let me just look at the Dow. Uh, 3 a.m. Yep. So a PSP, meaning a precision swing point, if this one is an up close candle and this one also you can see is an up close candle, over here in the Dow we have a down close candle. So SMT, it tells you that the price is about to reverse. A PSP confirms that the price has reversed, and you will see a reversal in price. So what you have, the step 2 is to spot a PSP candle, meaning what, on a weekly cycle. These are higher time frame cycles, because if you have these things and if you trade on the weekly cycle, meaning you're waiting for one day to take out another day's high or low, that's the weekly cycle, and this is really, really strong. Okay, it's stronger than the intraday cycle, meaning the daily cycle between which means SMT between the sessions. There is a whole lot of ideas behind it, and there is a whole equation, but I don't want you to go down into all that. Just I want to keep it simple. Step 1, look for a sequential SMT to support your bias or idea. Step 2 would be spot a PSP candle on a weekly cycle. That PSP candle in and itself is the second candle of the CRT range. Listen to what I've said. Now I'm combining two different ideas into one, and then forming a literal fusion of multiple strategies into one. So the second candle of the CRT range, okay, the second candle is, for me, of course, like in my opinion, is the PSP candle, like the precision swing point. Why? First, candle number 1, 2 a.m. range, candle number 2, 3 a.m. purge, candle number 3, distribution. Right? Let me show you again. Sequential SMT, candle number 1, range, candle number 2, purge, candle number 3, distribution. But here you can see we have a totally different candle, meaning if these three are to be coupled together and then work in the same direction and same way, why do we have a lower down close candle over here, the 3 a.m. candle, and then this one is a up close, and this one is also an up close candle. This is a precision swing point. Okay, and then especially when you have a precision swing point between S&P and Nasdaq and S&P, it's crazy, I swear. So this one is the second candle, right, of the CRT range, and this of course is the third candle, and even this one is a precision swing point, as you can see. So a precision swing point is actually can be used as a whole PD array in and itself. So you want to short inside this candle. That's what the third candle is, right? That's what CRT teaches us. You have to short above the open of the third candle, and then that's inherently it means that you're going to be shorting in the range of the second candle. Okay, so you have what now? Two ideas combined together. Instead of you going into looking at the old highs, old lows, order blocks, FVGs and all that, that's all good, of course, but then unless and until you have a proper narrative and idea and logic, it's a whole different story. Okay, and then step number 3, you have to know where price is going, which means the drawn liquidity. Simple. Now if you are a CRT trader, okay, you tell me what is the drawn liquidity, because if you've been trading CRT for a while now, you should know what drawn liquidity is. Where shall be your drawn liquidity? It's simple. Literally at the low of the first candle. This is your immediate draw. First candle, second one, and then third. This is your immediate draw. Okay, so it's up to you whether you want to target the low resistant liquidity run. Of course, that's good, but then if you are a scalper who likes to take profit really quickly and then get out of it, your first draw is the candle range low. And of course this is the continuation as well, and as you can see, like, we had a closure below, candle traded back up into the range again, and then you can see the expansion. And this was called for, actually. I literally, during, I guess, 12:50 or something, 12:57 UAE time, around 1 p.m. UAE time, I called out this one, right, during the London session. Actually, I said that Monday will be an expansion range, and then it was. Anyways, so let's just go into the lower time frame. I hope you understood this thing. I hope I'm not like being too advanced or moving around too much, but this is it, guys. I swear to God, this is it. You look for a sequential SMT to support your bias, meaning before you look for a CRT candle, you have to look for this. Secondly is to spot a PSP candle on a weekly cycle, and then you have to look for your drawn liquidity, and then all you need is a lower time frame entry. Okay, now I'll show you something really interesting what happened today, and I'm 100% sure a lot of you would be able to relate to this. So now let me ask you once again, if you are trading the 1 hour time frame, okay, and why are we looking at the 1 hour time frame? Because we are looking at the weekly cycle, okay, because the candle closure matters. Now if you're trading a weekly time frame and you're looking at a 1 hour trading the weekly cycle, and then you're looking at a 1 hour time frame, which time frame you have to go down after this? Is it a 15-minute? If your mind said 5 minutes, then you're correct. Why? Because for the lower time frame sequential SMT, you need the 5-minute closures. Now this was the actual SMT, right, on a 5-minute time frame. Let me show you guys. Let me just drop this one. So you're looking at Nasdaq and S&P right now. Okay, this was the sequential SMT, correct? Now if you were looking at just this chart, okay, if you're looking at Nasdaq only, you would have been waiting for price to take out this high, right? But it failed to take out this high, while in S&P as well, it failed to take out this high. So there is no SMT here, right? If you can see, there is literally no SMT here. Let me show you something. I swear all the studies and everything have like really played its part really greatly, and I'm thankful to Trader Daye and Romeo and everyone who's been making these courses. If you remove the wicks, okay, what do you have here? This low was right here, right? So what do you have here? you have a hidden sequential SMT. This might be something new for you guys, but it has been out there since a long time. So that's why you did not witness price taking out that one particular high in both the assets. I'm not talking about Dow Jones, but for the fact that this is what played out so good is crazy. And you won't believe it, at this time I was on my phone, and I've been like literally busy with some preparations and everything. That's why I did not take this trade. And then just look how it just melted off really quickly. And this here as well was another entry, I guess, if I'm not mistaken. Yep. Let's see. We have a okay, again we have the same thing. Every single time this plays out, it just builds up my confidence so much more. And I like to share it with you guys because I know a lot of you have been struggling a lot to understand what to look for in the charts. And I might be boring a lot of you, but I don't really care now. It's just, I just want to deliver again and again so that you guys understand. Here you have a hidden sequential SMT once again between the two microcycles, 90-minute cycles. Right here, even this low actually was formed here. So this is crazy actually. And then you can see the delivery of price, and it's still delivering lower. It's not stopping. So I hope you understood like the whole idea of me telling you that there will be a revised way of looking at the charts. Okay, and you might be thinking you're saying the same thing again and again. No. If I'm saying the same thing again and again, then it's for your own betterment and mine, because repetition teaches the donkey, and we are much better than a donkey. We are human beings, and we are higher creatures. So yeah, let me just take you back. Where was I? Yeah. Your drawn liquidity is the lower one, the lower low of the candle. Step 4 is to look for an entry on the M5, meaning the 5-minute time frame. Or if you're trading the CRT, meaning the 1 hour candle range, you look for your entry on the M1 time frame. So let me show you an example. What happened? You're looking at the candle range high. Okay, if this is the candle range high, then there will be a 1 minute or a 5-minute change in the state of delivery. And there was actually. You have this order block right here. Okay, price closed below, giving us an IFVG, and then that was it. That was the entry right there. Why was this particular entry was confirmed? Why was this bias confirmed? Due to the fact that we had a sequential SMT. Right or wrong? Am I right or am I wrong? And you have this drawn liquidity right here, which was met. This, for me, this is the NFP low which I've been rooting for. Okay, and that is met now, and I don't know, like, let price do its part now. we'll wait for Tuesday and Wednesday actually. So same idea applies for everything. Okay, we have CPI coming in, so don't be rushing into any particular trades, but follow these things. Just these are the things which you require. Okay, you look for your sequential SMT, then you look for your CRT. If you do not have this, CRT will fail. Trust me when I say this. And then spot a PSP candle on a weekly cycle. Okay, meaning a 1 hour time frame. You have to look for a PSP, meaning two assets closing in one way, and then one asset will have an opposite up close or down close candle. Okay, and then you have to have a clear drawn liquidity, or you can have a fixed 1 to 3 RR trade, or 1 to 3 RR. That's it. That's all you need. And this is the same thing which I'll be following. So if I am placing any trades, you should know that I'm following these rules. So I have given you my entire sauce, which I would call it. Okay, the next time you go on a chart, do not look at the monthly time frame, do not look at this thing, you know, the weekly order block, FVGs or anything first. Of course you have to look at them, right? You have to make sure that you look at them, but in what context are you looking at them? In what context? Like, what's actually giving them the logic? For example, here we'll have this FVG. All these things, you know, they are rendered redundant when it comes to time and sequential SMT. So yeah, that was it for the video. I know I've been mentioning in my community that I'll share it with a few people, but feels like I'll be off YouTube for a while, like 2 or 3 days. So I'll just let you guys enjoy this video, and I'll see you until next time. Okay, until then, good luck, good trading. Do not rush into any particular trade without having a proper idea. Okay, I'll see you next time.